Good afternoon. You're watching us here on Midcap Radar. I'm Mangalam Malu. Back with me is Sonia Shenoy. And every time we're coming back, the market's only seeking lower levels. As we speak, the Nifty is once again at the low point of trade. In fact, in today's trading session, shorting at any point would have made you money. And currently, it's closing in on that 18,500 mark. It's been led lower by the IT stocks, the weakness that we're seeing in the metals pack, and the Nifty Bank, which is now it's exaggerated its downfall with a cut of over 200 odd points. All the frontline indices at the low point of trade. Hi, Sonia.
Hi, Mangalam. And as we were pointing out through the course of the day, right, it's the hawkish tone from the US Fed that has spooked most global markets, and India is no different from that. The Fed saying that there's no immediate end to the rate hikes, and the terminal rate is as high as 5.1%. So up until then, they're going to continue to fight inflation. That's something that the street definitely has been spooked by, and the market's now at the lowest point of trade. But let's take you through all the top headlines. Midcaps fare better in a weak market today. Stocks take a step down after mixed global cues of a hawkish Fed and unperturbed money markets. IT and metals lead the slide, while oil and gas and realty see some green today.
Sapphire Foods gains nearly 11% after nearly 11% equity changes hands in a block deal. Marquee investors are buyers in the large trade.
And IRCTC slides as the government issues a notice for sale of up to 5% stake in IRCTC through the offer for sale route. The issue includes an option to retain oversubscription of 2.5%.
The mid-cap fertilizer pack surges with players like Gujarat State Fertilizers, National Fertilizers and RCF along with fertilizers and chemicals Travancore Fact surging up to almost 13% today. Kishore Roongta, CMD of Fact, tells CNBC-TV18 that prices of fertilizers have fallen anywhere between 15 to 20% but are still very high.
All right, well, we begin Midcap Radar telling you that the Midcap index is not as bad, and today has been a bit of a down day. So let's do one thing. Let's tell you about stocks that are perhaps bucking the trend this afternoon, and there are plenty on our radar. Some of the fertilizer names have been doing well. FACT is now up almost 14%. GIC, UCO Bank, Sapphire are the stocks that are doing pretty well. Motilal Oswal, KPIT Technologies, Lakshmi Organics, Prestige Estates, just trying to cover a couple of stocks that have been doing well through trade today. IRCTC, of course, is in focus as well on the back of the OFS. Mangalam?
Yes, it is. Some supply worries, taking the stock lower as we speak. The government has announced 2.5% OFS of the company, offer for sale. That is, they will be supplying their holding to the market itself, and it will be doing that at a steep discount to the yesterday's close price, almost 680 rupees, which is about 7.5% lower than yesterday's close of over 730 odd rupees. And were that to get oversubscribed, they also have an option of increasing that to 5%. So 2.5% is the base offer, 2.5% is the additional offer that they're making. They hold about 67.4% stake in the company, so that post this entire issue is likely to go down to about 62.5 odd percent. But we're talking about stocks which are bucking the trend, and we do have a few of them. You spoke about Lakshmi Organic. A vertical liftoff is what we've seen on that stock in the last few minutes or so. IRB Infra is the other one. We did have the management join us this morning and speak about traffic growth, so that stock is doing extremely well too. REC and Apollo Tires actually are the other ones which are at the high point of trade. So let's talk about a bunch of other movers too in our segment, mid-cap movers. We head over to Vivek every day, who tells us all the mid-caps that are moving around in trade today. Vivek.
Well, good afternoon. Quite a few stocks on the radar, especially, we're looking at some of the stocks that have hit a fresh 52-week high in today's trading session. APAR Industries, that caters to the power transmission segment, today has hit a fresh 52-week high. L&T Finance Holding continues its uptick, almost reaching the 95 levels. And UCO Bank, now this particular stock is up for 9 straight sessions in a row. Some interesting trends there, and this particular stock continues its upsurge. You alluded to the, the entire Ferd pack. You gave a couple of reasons. Some of these companies have also gone ahead and done roadshows, outside India, and the investor interest there has been quite good. So names like Madras Fert, NFL, Mangalore Chem, RCF, all of them are surging in today's trading session. Also looking at some of the stocks that are moving up with quite strong volumes. Apollo Pipe today is up on very good volumes. GIC-RE continues its up move. Piramal Enterprises, after a while, is seeing a very strong up move. Megmani Organics as well as MTNL are some of the stocks that are doing quite well as far as the volume trends are concerned. However, on the other hand, some of the stocks that are seeing profit booking or continues to see losing trends. J&K Bank, Finiotex Chemicals, continues its downward momentum. Mirza International as well as CMEC, all of them are the losers in today's trading session.
Okay, well, thanks a lot for that. Just wanted to point out, since Vivek was talking about losers, right? There are plenty of stocks that are hitting fresh 52-week lows. And one case in point is Metropolis. That stock is at a fresh 52-week low as well. In fact, a lot of names, you have something like an Aurobindo Pharma that's at a fresh 52-week low. So plenty of stocks in the pharmaceutical space, for problems of their own, are under a bit of pressure right now. Jay Thakkar of Marwadi Shares and Finance will be joining in for a quick check on the technicals of the market. Jay, good afternoon and thanks for joining in. Not looking like a good place to be. The bears have attacked, for now at least, down almost 140 points on the Nifty. But at this 18,500 mark, is the risk reward favorable to go long?
Hi, very good afternoon to you, Sonia and Mangalam. Well, I would say that, see, 18,500 is the level to watch out for in today's expiry. I mean, for an intraday perspective, from the bounce back perspective, yes. For the remaining part of the day, I would say, a stop below 18,480 would be a good, risk reward on the long side. With that as a stop loss, one can actually go long for a technical bounce of, or a trading bounce till 18,575, 600 from an intraday perspective. Overall, if you see, then I would say, Sonia, the trend for the short term seems to have reversed in Nifty. I mean, the entire bounce which we recently saw, right from 18,345 until 18,700, seems to be quite a three-wave rise. That is a corrective bounce back, indicating that the short-term trend might have reversed, and Nifty might consolidate now within a band of 18,300, 400 on the lower side to 18,700. The Bank Nifty, interestingly, has reversed, and it is now trading below 44,000 levels. I mean, that's the important level from an expiry point of view, and 43,800 on an immediate basis is the very critical level as far as Bank Nifty is concerned, like that of 18,500 on Nifty. So if 43,800 is broken, and if Bank Nifty is sustaining below those levels, then I would say yes, the trend out there will also be reversing. Else, Nifty Bank can bounce back and help Nifty, to further bounce back on today's trading session. So at this moment, or at this point of time, I would say yes, the risk reward is favorable for the remaining part of the day. But from the short-term point of view, Nifty seems to have reversed from up to down.
All right, take that point. From a short-term point of view, Nifty seems to have reversed. We'll keep an eye out on the 18,500 mark that you spoke about. Individual stocks, what should one do, Jay? I mean, since you're saying that the short-term move has reversed, are you looking to go short?
Well, there are a couple of recommendations right now that I have, Mangalam. From the mid-cap idea or mid-cap segment, I have a buy recommendation out here. I have a buy recommendation on Sterlite Technology. I mean, this stock has reversed quite well from its lower end of the consolidation, I would say. It has formed a very nice symmetrical triangle pattern. If you see its last 3 to 4 weeks move, then this stock has been consolidating within a band of 195 to 155, and now it has reversed from the lower end of the region. With this kind of a reversal, it seems to have completed the last leg of the consolidation. The momentum also in the short term seems to have reversed from down to up. So Sterlite Tech might outperform. The broader markets are any which ways performing quite well, despite today being a weak expiry. I think Sterlite Tech can be bought at current market price of around 177 with a stop loss placed below 165, targeting 205 to 220 on the upside. As far as the shorts are concerned, yes, I do have a short idea, and that's on the IT pack. That's from the large cap, I would say, Infosys. I have a sell recommendation out here. It's trading around the levels of 1547 right now on the spot. One can place a stop loss above the levels of 1570. These are the spot levels which I am suggesting. And on the downside, on the immediate basis, one can target 1500 to 1480.
Okay, all right. That's on Infosys. Jay, thanks a lot for joining in and giving us some ideas. So that's the commentary coming in for the day. Let's slip into a quick break. On the other side of the break, we'll have Krishnan Venkatachari, who's the CFO at Signity Technologies, to discuss an outlook on their business. Do stay tuned in. Welcome back. You're still watching Midcap Radar on CNBC-TV18. As promised, we have the management of Signity Technologies. So If you remember, the IT major HCL Tech recently told CNBC-TV18 that higher than anticipated furloughs in the BFSI, telecom and high-tech sectors has driven the downward revision in the company's guidance. So the question we're asking is the tech sector witnessing a growth slowdown? What does this mean for companies catering to BFSI? We focus on Signity Technologies. It's a company that draws over 20% of its revenues from the BFSI segment. Krishnan Venkatachari, who's the CFO of the company, joins us now to talk about that. Mr. Venkatachari, before I talk about your own business and the growth trends, first a word on the caution that HCL Tech threw up with respect to the BFSI vertical. Are you facing the same at your end? And are you just seeing a delay in terms of client spends, or are there cancellations as well?
Hi, Sonia. Good afternoon. And we have gone through the statements, and we have been keen observer across the industry and the trend very clearly. As it stands in terms of the market perspective, we are cautiously optimistic. When you look at in terms of our business per se, aligning with what it is in terms of the global outlook, is that we have been very successful. October, November, December forms the bulk of the renewals for us, and we have been able to successfully carry through about approximately 88% of the renewal, including the BFSI sector, confidently. But when I step back and try to give that as a prelude, is that the momentum which has been given to the digital and other transformation initiative during the Corona time by the corporates across the world, I think that steam has not stopped, and that steam is continuing, and clients are continuing with that core area. I think it is a non-core areas on the IT and other areas which has been trying to take a downward trend, which predominantly in the BFSI sector, which is coming through. But fortunately for us, we have won a couple of clients in the BFSI sector, which are huge deal clients during January of 22. And those clients, the renewals have moved up, which is a major contributor, which has rolled over for the next year intact. And then we are cautiously reviewing in terms of the further expansion and mining in terms of the activity.
Right. So BFSI is a little over 20% of your overall revenues. The others, of course, comes in from retail, e-commerce, travel, hospitality. Both these are doing extremely well. I just wanted to know about healthcare and life sciences as well. All basically an outlook on all the other verticals that you operate in. I mean, earlier you had spoken about high teens sort of growth in retail and e-com, travel to recover to about 18 to 20% of your revenues versus 16% last year. And for the overall business, over 15% growth this year. What is your sense? Do you hold on to those numbers?
I'm holding on to the numbers for the current year because we are almost finishing 3 quarters. Of course, the numbers will come through as we publish. But I think the year doesn't look any kind of a challenge in terms of, except for a minor aberration. But I think we are confident in terms of the current year as it stands. For the next year, though we are not in the process of guidance, but I think we have accelerated more in terms of the newest technologies, in terms of the digital and other initiatives, and especially existing set of clients in a big way. And adding to that, we are also in an advanced stage of negotiations with a couple of large clients on the retail and e-com sector. So we are pretty confident that the high teen growth for the next year also we will be able to achieve as it stands. But just to give some statistics, probably is that the market, as per Gartner, also is from 7% to 5% is what is the growth is tapering down. But that itself as a volume is going to be at about 4.6 trillion. And with core areas of development coming through, while we are cautiously observing, but I think we are confident that we'll be able to pass through the phase. And the trend says very clearly that when the recession comes through, it's about 3 quarters. And post 3 quarters, I think it's the IT and software which really bounce back. And we expect that to happen even at the mid of the calendar year next year, that things will really bounce back. And adding back to your question in terms of the airlines, I think we have seen an encouraging trend in the airline sector for us.
So you said that you're looking forward to high teens growth in this fiscal. Will any of that come courtesy the acquisition route? Because you were contemplating an acquisition as well. Will you close anything in this fiscal? And if yes, what is the kind of ballpark amount that you're looking to invest?
I don't see something affirmative as it comes will move through. But as I see the timelines, probably before March, the inorganic growth will not be concluding as it stands the way the work is moving around. But I think the next year part, we will come back very clearly because definitely the evaluation is in progress clearly. But when I talk about the high teen growth, when I've talked about organic growth very clearly, without any kind of an inorganic growth.
Right. How many clients have you added in the third quarter so far? The first quarter was 13, the second quarter was 9. You said you have renewed 88% of your BFSI clients, but you also added a bunch of new clients. What is the outlook there?
I think we have added about close to 7 new clients during the quarter, which are sizable in business terms as it stands, and which is an encouraging trend for us on a economy which is slightly spiraling downwards. 7 new clients we have come, but of course we'll come out with the entire data set of numbers as we publish the results very clearly.
Okay, so 7 new clients added. The promoters have a little over 36% stake in the company. At any point, would they be looking to add more stake or buy back?
No, as I have repeated very clearly, promoters are confident about the business very clearly. It's the question of just adjusting their priorities, and at any point of time, they will try to increase their stake, and they are here to stay in the business to increase the stake. I think it's a continuous process, but I think I'll not get into their financials in terms of when they'll be doing it and timing it. But I think they are absolutely optimistic and positive about the company in terms of trying to reinvest back or probably do the kind of buybacks which we did during the year, or the kind of activities which are beneficial to the shareholders. But I think absolutely they are contemplating and they are trying to work through to see that how best their stake can really move.
Yeah, the reason why we asked this question is because they have been increasing the stake from June to September as well. And from the last time we spoke to now, the stock has corrected about 15% odd. So if the promoters are looking to enter, it's only getting more attractive. At what level they tend to enter is something that we're trying to time. But I understand that you won't be able to speak about that. Could you give us some more sense on, you've recently incorporated a subsidiary in Costa Rica. You had built an office in Prague about a year ago. So what sort of growth are you anticipating from these 2 places? And at the same time, margins, you said 15 to 16% is something that one can expect. This is what the levels were pre-pandemic, and now post-pandemic, this is normalizing. By when does that happen?
We expect that in terms of the EBITDA coming back to the north of 15% plus in the next financial year. That's a target which will really move up, and we are confident we'll be able to do that. Coming back to the subsidiaries very clearly is that we did open up in the European region, and that has gone a bit slow in terms of the auto measures post the corona, in terms of trying to slow down our deferment. But however, we still have that as a strategic center because we are catering to certain UK clients in terms of banking and other sectors. So it becomes a good nearshore center, though the ramp up has been slightly slow. But coming back to the recent incorporation approvals which we have filed across in terms of the Costa Rica, is that our existing clients, be it on the airline industry or on the the retail and other space, have also asked for a nearshore facility, and after careful evaluation, and there is a business-backed guarantees coming through from these clients, and these are global corporations, and business-backed guarantees have come in, and based on that relationship, we have quickly accelerated in terms of trying to incorporate the company. And we are positively optimistic because the timing at which what we are trying to do itself is a difficult time, which means that the confidence level in terms of the business is quite high. And that is one of the reasons we have moved ahead very fast over here.
Okay, all right. Thanks a lot for joining in, and all the best. That's Cignity Technologies. They remain cautiously optimistic and they're holding on to their guidance. The stock is up almost about 0.7% right now. Let's slip into a quick break. On the other side is a special segment, Midcap Spotlight. We'll be focusing on GIC, or General Insurance Corporation of India. The stock is up 9% right now. Stay tuned.
Welcome back. You're watching us here on Midcap Radar, and as we speak, the Nifty is below that 18,500 mark, has broken below that, just below that as we speak, 160 points down, and that's led lower by the Nifty Bank, which again continues to decline. The last few minutes, we've seen a big dip come by in the metal space as well, which was not doing too well in any case, but currently has extended its loss and now moved to the low point of trade. So the metals index is at the low point of trade. But amidst all of this, there's just one stock which has been doing extremely well, and that forms a part of our mid-cap spotlight, General Insurance Corp. A big mover today, this week, this month itself. What really is happening out there? Surbhi Sutaria joins in with what's driving the stock. Surbhi.
Hi, today we're going to focus on General Insurance Corporation. Now, the stock has been outperforming the broader market for a while. It is up nearly 10% today itself. In the last month, it has gained 24%, and in the last 6 months, it has gained over 56%. Now, this is not the first time the stock is seeing such big moves. The last 3 consecutive years, it has seen a rally of 30 to 40% every year, but this quickly fizzles out. Why does this company see such exaggerated moves? One of the reasons is the free float of this company is very low. It's just 6%. The promoter holding is 86%. LIC holds close to 9%. So only close to 1,700 crores worth of shares can be traded in the market. What does this company exactly do? It provides reinsurance to general insurance companies, and in this particular segment, they have a market share of nearly 60%. There are some pertinent risks to this company. The first one is that IRDAI, the insurance regulator, has proposed removing the order preference favoring the company. And the second one is their inability to grow their top line. Their underwriting fees has seen a decline of 3.5% on a year-on-year basis in Q2, and in the last 12 months it has been down 16% when you compare it to their Q4 of FY20 levels. That is when the company was listed. So this recent rally may fizzle out unless there is a financial performance turnaround in the upcoming quarters.
Okay, thanks a lot for that. Big moves coming in on GIC, and with that, it's curtains down on this edition of Midcap Radar. Thanks a lot for watching.